Hey, this is BA and welcome to Power of W.D. Gann's Time Cycles. What we're going to be doing is we're going to be taking a look at how the cycles operate, and I want to show you and emphasize really the power of bringing two cycles together and what that means. So let's get started. A little bit of introduction on myself. I started trading in early 1995, which was 21 years ago. The systems I traded with, I was not into WD Gann at the time, just trading. I started trading options. I think it was, if I recall right, it was late 96, but that may be off by a year. So about 20 years. The systems I traded with back then were not they didn't complement each other, or were hard to gauge. You know, it was open to interpretation. You know what I'm talking about, using stochastics with moving averages, you know, or something like that. Those type of systems. And I was like, you know, I really need a better system. So I was always on the hunt for the ultimate system. I finally put together some indicators combined with what's known in the field as balancing a stock, and that really helped me. The profits were a little slow in the beginning, but you know, I got better and better. One of the things I then added in was my early interpretation of planetary cycles. Now, what that means is these were not Gann's time cycles, but they seem to call turns in the market. And I remember my first market call that actually I put out to people. I said, on this date, it'll be a high. And that was July 20th of 1998. And I think I had July 17th, which was the Friday. And if you look on the chart, July 20, 1998 on the Dow is a good high. So I was just, you know, one trading day off, which is really good for, you know, 1998 time frame. And then years later, I got into WD Gann's time cycles. Okay. That's when they entered my life. And I really, since that time, I've been able to improve them a lot, you know, and move on to other things. But that was really the turning point, is getting those time cycles operational. And the time cycles, of course, because one of the questions is, where did WD Gann put his time cycles? And that, of course, is in the book, The Tunnel Through the Air by WD Gann. Now, I've got that free on my website, so I don't sell it. I just a important note as to where this stuff's actually located at. Okay, so that's kind of like my trading introspection on how I came up. I mean, you know, I know what most of you know, I know everything that's out there as far as the different indicators, you know, stochastics, moving averages, all that stuff. I've used all that stuff, all the technical analysis I've done. By far, WD Gann is the best out there. I mean, by far. And that's 20 years of experience talking for you. The combining of the cycles is what makes Gann's time cycles so powerful. Let's take a look at two cycles. One will be a smaller, faster pivoting cycle, and one will be a cycle of repetition, known in the Gann world as a COR, which stands for cycle of repetition. Okay? And this is going to be for the euro US dollar. These dates right here for 2016. Cycle A, this is actually the cycle. When you see my forecast on the site, I do not do this because I don't trade the euro US dollar. I'm an IBM options trader. But I put these out for other people's interest, you know, so that they can, you know, gauge WD Gann's methods more accurately. This is cycle A, and this is the faster pivoting cycle, and this is the one I use in my forecast. Now, in my own trading on IBM, I combine it with what's known as the COR, and that's what we're going to do here, okay? We're going to take cycle A and combine it with the COR, and we're going to see how that looks and how these two cycles function together to reinforce each other, and within that is the power, that reinforcement. Okay? So go ahead and write down these cycle A dates. And these are the COR dates. And now notice some things about this. cycle A goes low, high, low, high, low. The COR also has to go low, high, low. Now, here's the rule. Cycle A always pivots with the COR at the same time. The COR never pivots by itself. It's always either a cycle A pivot or a cycle A inversion that the COR pivots with. So, I have people that would say something, okay, BA, well, down here you have March 1 low, and for the COR you have March 2 low. So you're going to have two lows there. You'll have like a double bottom, one day and one the next. No, this is pre-orb. Okay, this is before orb is taken into account. These cycles won't pivot separately. They always, and this is a rule, they always pivot together. Okay, same thing with this. February 1 low, February 2 low. That doesn't mean we're going to get a low on the first and second. That's going to come in at one point in time specifically. Okay, so like I said, go ahead and write these down, and let's go take a look at the Euro US dollar and see what happened. And this should provide deep insight. Okay, here we are with the Euro US dollar. And our first date is February 1 of 2016. Okay, so that's right here. Misses the low kind of by a day. Okay, and our next date is February 11, which is supposed to be a high. Okay, and that's February 11 right there. Okay, now take a look at this. See how that bar sits underneath this line I drew? That barely breaks through, just a hair. This one sits on it here. Okay, this one sits on it here. This one cuts it. This one stops right and closes right on the line. You see that? That's indication that that line is drawn right. And in a future video, I'll tell you what that line really is. All right, our next date here for our smaller cycle is the 21st. I've got a cycle pivot low here on the 22nd. Now you can say, why is this not the low? Well, it's really stops going down here and then it goes sideways up. We'll take a look at that a little bit. Okay. Go here and then sideways up to, got a 26 as the high. See how that stops right on that line? Now that cuts it a little bit there, but that stops right on that line. Okay, high is the 26, and we got a low on the 1st of March, which should be here. So we miss it by a day. We're down here. Okay. All right. Now that's cycle A. Now let's take a look at our other cycle. And I'll have to change these lines after I draw them. But our other cycle pivots. So this is kind of drawn up above the turn so you can see where they're at. Okay. And so our cycle A went from February 2nd, which is the low is actually the 1st or somewhere in there, and went up to a high on February 11th. Okay. Now the next one is then it goes down to a March 2 low. Okay. Just right here. So that's how that looks. Now, so notice that with these rules, every time that the faster cycle pivots with the COR, you have the exact turn here. Okay, at one point. It's not like two highs or nothing like that. All right, and then down here again. So this is a smaller, faster moving cycle within this medium cycle. The COR is a medium cycle. There's larger cycles. We're not going to cover those. Okay, this principle is critical to grasp because the COR, if you notice, is generally, not always, it's not 100%, but generally the bigger trend. Okay, like this was an upward trend for this half of the month, and this was a downward trend for the second half of the month, which mimicked the COR exactly. Now here we have the smaller cycle that went down, and then we paused, went up, and then down. So, you know, we've all put on these trades where, you know, it goes down for a while and then it goes sideways. Well, what's going on? Well, what happens in that is you get the sideways move in a trend where it's mixed up. Okay, you see this has got a lot of downward pressure to it from the larger cycle, and here it's it crosses, it goes up, and what do? You get sideways. Now that's not always the case. Sometimes it'll go way up here, you know, if you get a spike day or whatever, like this guy. All right, but you can see that that's the cause of why, one of the causes why the price stops at those points, you know, and kind of goes sideways and stuff. Another is the actual price points. We'll make a point on that later. All right, so you see that these two cycles, the cycle A and the larger COR cycle, they pivot together. The larger COR cycle only has, you know, a few pivots a month, whereas the smaller, faster pivoting one generally has about 4 to 6, and that's what you'll see if you take a look at W.D. Gann's 1929 forecast or any of his forecasts. He has about 4 to 6 turns a month, and that's where they're coming from. Okay, now there's other ways to hit that, but you know, in this video, I needed to make that point. Let's go back to the presentation. Okay, and these were our points. Now see that, how those two coincided, those two coincided, and these two coincided. What would happen if we had February, let's say if we had this as a low? Okay, what would happen in February 11? You can't pivot like that. These two cycles are always in sync. Okay, notice February 11 high, February 11 high. You're not going to have one a high and the other low. That never ever happens, not in the history of this planet. Okay, so March 1 low, March 2 low down here. These cycles, these two cycles always pivot together. And it's in that reinforcement that you get the real power of it. Okay, now let's look at a strange lineup that would confuse most, but has a logical conclusion for August 2015 for the Euro-US dollar. Okay, cycle A, July 31 high, August 5 low, August 12 high, August 18 low, August 22 high, August 28 low. Let's see how many turns there are that month. 1, 2, 3, 4, 5, 6. That's within our parameters. Some people write me they got, you know, 8, 9 turns or whatever. That's not from cycle A. COR has two pivots. August 6th is a pivot and August 28th, and these are both aligned with lows. Okay, but here we've got a problem. Look, we've got high, low, high, low, high, low. Here we've got with the COR low, low. We cannot do that. We cannot do that. That's impossible. That will never happen. We cannot go low to low. Okay. So what's the solution here? There's got to be a solution. Okay, here we are. I checked, and there's an inversion zone for the COR. Inversions occur in specific areas called inversion zones. There is an inversion zone for this COR that fits an August 23rd inversion high. Okay, August 23rd inversion high. So what's critical to understand here is now we're in sync. Now this one goes high, low, high, low. This one goes low, high, low. So inversions, while you fear them when you're starting out, are really nature's way of keeping the two cycles in check. And I've put this in other videos. All right, let's go take a look and see how this one worked out with the July 15. Did I just say July 15? With the 2015 Euro-US dollar. Okay, let's take a look. Okay, we're going to start with our smaller, faster cycle first. And it had a high, July 31. Which would be this guy here. Okay, and then we go down to a low, August 5. Okay. August 5 low. Then up to a high on August 12. A low on 18th. Excuse me. August 18th, low. There. August 22nd is a high. That's the 24th. That's the 21st. So that's a Monday. So we have August 22nd as a high, and it came in on Monday the 24th. That is acceptable. Okay. And then August 28th, low. And that's it for the month of August here. All right, so that is our smaller, faster moving cycle. Now we want to add in the larger one, the confirming cycle, known as the COR, cycle of repetition. We had a low August 8th, and we go up to an inversion high August 22nd, which of course is this guy up here on the 24th, because that is over a weekend. And then 828 low. Okay, so, and I drew these a little bit out. They're actually the same point, but I needed to show the difference in the color of lines. So this would actually be here, but then it disguises our line. So I put it right there. Okay, and as you can see, again, this is our major trend. But here we got, you know, and that's why we went up here and then down to here and then really rocketed up. Both of these guys were pointing the same way. And here we went rocketing down. Both of these pointed the same way. Now you can have both of them pointing the same way, and they're kind of like pointing, you know, sideways and stuff like that. Now here's the key to that, is each one of these pivots has a specific price point, knowable in advance that it's going to. And also on top of that, because you're using two cycles, you can have two different price systems that confirm each other. That's the fusion. That is the power of W.D. Gann's time cycles. If you've gained insight from my video, subscribe so you can get the latest of my free market calls, updates, commentary, and teachings. Hey, I've got something for you. You know, most people don't watch the entire video, and this is pretty common on YouTube. So for those of you that sat through my boring video here for the last quarter hour or so, I got something for you. On tunnel, the first date given in the book is from the foreword, and it's dated May 9th, 1927. Okay? The last date in tunnel is August 30, 1932. These two dates are exactly 1,940 days apart. Now, that's probably not a coincidence. Once again, the first date in tunnel to the last date given in tunnel is 1,940 days. So you really are looking back from 1940. Knowledge is priceless. Hey, this is BA reminding you, you will succeed. Take care. Bye-bye.